Hello, good day. Today I'm going to share the planning for first half of 2026. So let's go. So if you look into the portfolio now, as allocated on 28th February, firstly, asset and long term have been reduced, which in my next slide I will share with you as well. And what have increased over in the past 1.5 months is the money market, which is cash. So basically, the cash portion have increased quite a fair bit, and the rest like crypto, option, and dividend are still maintaining the same. So if you look at the portfolio changes in 2026, basically on the left hand side is what I have before the 28th February, and on the right hand side is what have changed. So along with asset, the reduction is about 16%. And then for long-term holding, it have been also reduced to about by 9%. Insurance is still maintaining the same, nothing changed. But what is the bigger change is the money market. So overall portfolio, I think the era of 28% or 30% gain since 2023, this have to be uh, reset again. So from Q2 of 2026, basically money market fund will be a part of the active position that I will maintain. And I do think that this maintain of cash position will still go on until somewhere in 2027. By then, perhaps the data and the trend will be much more clearer.
So forward looking, for property itself in Singapore especially, it will be more of a defensive play. So at this moment, looking into the inflation brought by oil, I do believe that Federal Reserve will actually maintain interest or even increase interest to counter the inflation bring by oil. Secondly, I think on the dividend company, it's good to focus on some of them and build accumulation now if there is a severe drawdown. But for property which is sensitive to interest rate, it's best not to increase position unless we have much more clearer on how Fed will actually affect the interest rate. As for long-term insurance, it's a borrowing return about 3 to 5%. However, it's considered as a very good attractive return in this period of uncertainty. As for crypto, crypto is always very volatile during uncertain time. In fact, in January to March, crypto have actually dropped from 130,000 to currently now about 60 plus thousand USD. That means also in January when crypto actually have a shakeout, it also means that uh, some of those news of impending war is already been into the inner circle. Those who have the information. And as for equity, it's good for premium harvesting. However, faster drawdown is being aside, so it's best to reduce the number of trade. I've been trading about 1,008 to 3,000 trade per year. This year, probably aiming for about 1,000 trade, and that's good enough. And lastly, for cash, it will be an active position until the trend is very clear. I do believe trend will be much more clearer in 2027. So do take care and trade with care as well. And talk to you again in mid of April, which was projected in somewhere 23rd of February that there may be some potential catalyst. Talk to you then. Bye bye.